So how is your 401k's health? Many people saw them shrink during the recent financial crisis, but now with markets turning around, what to do to build them back up? Coming up on Money Matters. Money Matters is sponsored by Winona National Bank, personalized banking.
My main concerns about banking online was I wasn't sure I had control over it like I did if I did banking actually in a bank. My kids told me that, Mom, you can do this. It makes life a lot easier to be able to do it right at your home without having to even go to the bank. I can just do it wherever I am. I do not consider myself a techie person, but they make it very easy. I did not feel mobile banking was difficult to learn at all. Give it a try. You're going to like it.
This week, our Money Matters centers around rebuilding lost retirement funds. I asked Winona National Bank's Tom Kiefer what steps can be taken to recover our retirement dreams. So how did the financial crisis affect retirement funds like 401ks?
I think it impacted several areas. The first being obviously the drop in balances, and people saw that and saw the fall of 2008 especially hit their 401k hard. And some folks have lost confidence, although the folks that have stuck with it and have recovered since 2009 realized that during that volatility they were actually buying more units with the same dollars going in their paycheck. So those that have stuck with it, I think, are seeing a recovery, but again, a lot of folks are a little bit leery about what's on the horizon for stocks and bonds both.
What's the first step that I should take to help rebuild some of those funds that I lost?
I think one of the things that all 401k participants should do is actually look at their statement when they get it in the mail or go online and look at the types of investments they're invested in and try to see if there is opportunity to maybe take a little bit more risk. If they've been a little gun shy, the stock markets have recovered. There's a lot of optimism that corporate America is getting stronger as the housing markets and the labor force is working more. But the other thing is to look how much they're deferring into their plan. A lot of folks feel that they can't live on less intake, and all of us are struggling. But if they can put a little bit more in each paycheck, so if they're deferring a certain percentage now, try 1% more. And if they can live on that, maybe the next time they get a raise, try another % and slowly build it up that way.
Younger workers have the advantage of time. What can an older worker do to increase their savings and keep their retirement target on track?
I think, the advantage an older worker has a lot of times is that they are earning better wages. They've been working for their employer for a while. They have hopefully their debt paid down, and so they can maybe put more of their discretionary cash into their retirement versus, say, taking an extra vacation or hopefully paying for child's education. Those types of expenditures are over. In the advantage of an older couple that maybe has paid off their mortgage, taking that money and putting it into retirement plans. So they're again catching up for years that maybe they had to under contribute.
Where are the best places to invest my money?
And investments are going to be unique to everyone. And inside of 401ks, a lot of times your choices are going to be mutual funds, stocks, bonds, stable types investments. I would again hope that folks would look at and realize that their investment horizon isn't until the day they retire, but it's really many, many years, hopefully, in retirement until they die. So having a little bit more aggressive investment asset mix has proven to be historically a good suggestion. The other thing is, once the money is coming out, whether to buy an annuity and lock in your payments or whether to keep it in an IRA and just pull it out as you need it, there again, it's really a personal decision. Annuities have some advantages because you do get a fixed payment. They also have challenges. Low interest rate environment has reduced generally what you can get out of them. You also might have features in there and costs in there that limit your receipt each month. So again, looking at it at the time is the best. 3 years from now it could be totally different if rates have come back up, which we're hoping.
How about the stock market surging again? Should we be investing more, and what types of stocks would be the best?
Well, the discipline of a 401k is great because you are dollar cost averaging, and what that fancy term means is you're buying in all market conditions. So again, if you're putting in a certain amount each paycheck, whether the market's high or low, you're getting value when it's low, and you're necessarily not getting more when it's high. So yes, the markets are high, and yes, they're going to go down at some day and they're going to come back up. But again, they're not overpriced compared to historical measures. And again, economic cycles indicate that we're going to have strong markets. They're not going to be go-go for a while yet. The economy isn't. But again, in my opinion, if you're a long-term investor, there's never a bad time to buy stocks, because they're a vehicle that can continue to go up your whole life.
Next, there are lots of times either we or our kids get hurt, but when does that injury require an emergency room visit? Find out in a moment on Community Connection.